Good morning. This is Wednesday, March 1st, 2023, and it's about 8 o'clock a.m. Pacific Standard Time. So the market is actually going down. I just heard an alert go off, so that must have been, maybe it was a Dow, because Dow seems like it's kind of leading the way here. Yep, that's what it was. So the Dow Jones has broken down in this area. So like I mentioned before, that this area right here, this is kind of like a free fall area where once the Dow's been in this channel right here since November of last year. And so as I mentioned in my balance area tutorial about balance areas, it just builds up a lot of energy in here, and eventually it breaks out, and whichever direction it breaks out, it goes that way in a big way. And the longer this is drawn out, it's extended out, then the further down it goes. It's pretty much a rule of thumb. It's not 100%, but it's pretty close. And so the market's breaking down here. This is for the Dow. That's big news for the Dow to do something like that, because now it's going into uncharted territory, and the markets like to kind of hang around safe havens. It'll break out of these areas and it'll come back, and it'll channel, and it breaks out and it comes back, and it likes to be into familiar areas. So that's why it does that. That's why it channels like that, and it comes up and it balances there and it comes up. And so this was a long one here. So I'm assuming that when this thing breaks down, it's pretty much a free fall down, especially for the Dow Jones, because it's been up here so long. The ES is also it's been up in this area for a long time. The market came down, and it's pretty symmetrical until it actually came to here, and it went down, and I figured it would carry that symmetry and just go down from here, but it didn't. It actually went up. So it just prolonged the inevitable for the market to come down, but at the same time it built up all this energy right here, and now this thing is going to come down pretty big, at least to here in the short term. Eventually it's going to break down way down here, but it's not going to take, that might take a little while. But in the meantime, we'll just concentrate on what's happening right now. Same thing with the NASDAQ. NASDAQ going to eventually break down into this area right here. Draw a line, because this is really good support, and this is actually the very bottom of the market, meaning that when the market started here at the very beginning of this downtrend, this bear market, it pretty much stopped here and then balanced here, came here, balanced, came up here and balanced, and then when it comes back down here, it's going to have a retracement come up, but eventually it's going to break this line, just like this broke that line, and this is breaking this line here, because they always break. Markets never stand still. They never flatline. They're always moving. And like I said, eventually this is going to come down here. And I noticed that gold is starting to come up too. So maybe that's the bottom of gold, because eventually gold is going to go way up. As the markets go way down, they're expected to go down way more than where they're at now, a lot further. We're supposed to be in a crash equivalent to 1929. So if that's true, which I believe it is, then gold is just going to go sky high. I mean, it's just going to go it might even make new all-time highs ever in gold's history. So what else? I look at the Russell here. Same thing with the Russell. It's kind of behind the other markets. but eventually it's going to come down. So what about trading? As far as making money on this, okay, so I have my positions in place. I've got put options that I had bought up here, and then I actually sold them here, and I turned them all into the April contracts, and then the markets came down, and now I have all April contracts in here, and I had bought some more put options. And of course, when this thing breaks down into this area, then I'm going to decide what to do, because this market actually has not retraced yet. Like I said, every market retraces, comes down here, retraced about at least 50%, came up here, retraced, came up here and retraced. So from here to here hasn't retraced yet. So the next support, major support, I would say, is down in this area. And once the market gets down here, I'm sure it's going to probably have at least, probably a pretty good sizable retracement, and if not, down in this area. And that's when I will be selling, and I'll wait for that retracement, and then I'll buy again, and then when it comes down, then of course buy some more put options. And that's how I play my game. You don't have to play it that way, but that's how I do it. You can play it like if you bought back here, like we were talking about way back when the market was here, and you just load it up on put options. You can just wait till it comes down here. And I did show a graph of how I thought the market would play out, and probably wind up back down here maybe by the end of this month, which is March. And then you can probably collect your profits and get out before it makes another big bounce up and then down again. So okay, so that's pretty easy. Now, I did make a chart yesterday about people have been asking me about day trading. And yes, I do day trade, but not a lot, because I don't like to be stuck to this market here, this chart. Basically I'm done with this. There's nothing else to do until this market hits a short-term bottom and then gets ready to retrace, and that's when I sell, just like I mentioned. And I will let you know when I'm selling and when I think it's hit that bottom to where it's going to retrace again and then come back down. So if we look at these are for people who day trade. So as I mentioned before, these balance areas still stay even within the 5-minute chart. You'll see the same balance area in a 4-hour chart, which is right here, still there. It doesn't change. The consistency of these markets are, it's crazy. They're very consistent. That's why they're easy to trade. So as far as day trading this, so I'm not going to day trade today, but there are setups like I mentioned. Like here's balance areas here, and there's balance areas here, and there's little balance areas within the 5-minute chart. And let's say a balance area here when I see the market break down, and this would be a good setup to go down. And I had mentioned exactly this same move right here for in the day trading video. As far as this goes, see how the market went down, it came up, went down, and retraced. This is a very healthy market going down. It's going to come down here. This thing might retrace a little bit up here, and then that might be a good entry point going down. So the reason for that is because if you look at a longer term, let's say a 30-minute right there. So you can see that this is already broken down and it's made a new bottom. And if it continues down, let's say with another bar, then this market's just going to keep going down. It's a 4-hour chart. It's already made a new low. And I had mentioned, I think it was yesterday, that eventually this is going to break out, because the market could only stay in this time frame for so long, and it's got to break out. Markets just don't flatline or go up or straight down. They build these little balance areas, and eventually they break down, or they go up, depending on the trend. And overall trend is down. We're in a bear market. But of course, during those trends, you still have ups and downs, or downs and ups. That's the nature of this market. So anyway, this looks pretty weak. It looks like today's the day when it's finally going to break down. It's Wednesday, so it's the middle of the week, and that means something too. If this was Friday, well, then the market could wind up down here, let's say, and then Monday could continue. But since it's Wednesday, the middle of the week, and this is broken down to new lows, there's a chance for the next 2 days it's going to go down. So the markets usually go down. When they start breaking down, they'll go down, and if they break down pretty good, like here, this one broke down, and then you got all these down days until it starts hitting this balance area, another down day, another balance area. But I guess the point that I'm making is when the market comes down, it usually comes down, if it's going to drop down like this, it'll drop down for 2 or 3 days, and then it stops. And of course, if it starts hitting support, then that's going to be a big, and this is a pretty good support line here. Then if this came all the way down here until Friday, let's say Friday it wound up here, I would definitely sell my positions, only because now it's time for this thing to retrace back up to maybe even this line, and then turn around and come down. So this whole thing can play out this whole month. It could take a whole month for it to do that. Or of course, it could, in 1 month, it could be down here. So anyway, we'll keep track of that. I'll let you know when I enter the market, when I get out. So far, I'm still in with my put options. I expect this thing to come down at least to here before it retraces. And it would be nice if it just came down to here before it retraced, and then I can make more money coming down, sell it. It retrace back up to here, buy some more put options, and then write it down. Okay, so that's my strategy. This has been my strategy for a long time, years, and basically that's it. Now it's up to you to decide how you want to play this. Like I said, if you want to be a longer term, and like we talked about in here, and just let it write it down instead of hitting all these dips like I do, I wouldn't recommend that unless you have more experience. The other thing is, if you're a day trader and you want to ride this thing's coming back up for a little retrace, it maybe to here, and then it works its way down. Now again, if you're day trading, which I wouldn't recommend for anybody, a beginner trader, because it's pretty dangerous, and this thing comes back up and it retraces, you have to know where to put your stops. When I first started learning day trading, which is one of the first things I did way back then, maybe 20 years ago, maybe even longer than that, my mentors told me the first thing you do is as soon as you place your order, the next step is you place your stop. Even if you have to go to the bathroom, you don't go to the bathroom, you place your stop right away. So I would place my stop, it could be here at this line, or it could be up here. Of course, it's up here. You're taking more of a risk. And if you think this thing's on a downtrend here, a pretty strong downtrend, then you can place it right here. And then the market's going to retrace, turn around and come down. But you have to place your stops. Otherwise, that's what's part of money management. I don't need to place any stops for this longer term because there's enough delay in here where I can just get out. Now, if this market just shot straight up here, I'm still protected. Why? Because if it shot up here, it would shoot up because of news, and it's almost guaranteed it's just to come right back down. So this is kind of a different game that you play here. The patterns are the same. You look for the same patterns, just like in day trading. I don't trade any differently as far as that goes. It builds up these little balance areas. Here's another little balance area. Here's another little balance area in here. It came down, it built this little balance area. Now it's coming up. It came from here to here. Now it's going to retrace maybe halfway. And if this market continues down, then it's going to come up to about here and then probably retrace. If this market's not going to go down today, then this is the bottom and it's going to continue up, but you're going to have your stop in here. So you get out with a small loss, very small loss. Yeah, and if you would have got in, let's say here, and rode this thing down here, put your stop up here, I probably would have got out here, because you just want to play these small, let's see, what is that? Yeah, that's a lot of points actually right there. So that's, let's say you got in at 70 and you could have sold out at 50. That's 20 points. And if you have 4 contracts, you know, that's, what's that, $4,000? Yeah, it's let's see, that's about $4,000 profit right there, just in the short move right here. So I'm talking about contracts in the E-minis because that's what I trade. Sometimes I do trade options on this, and I will trade options on this. But you know, I'll just decide on how I feel this market out, and then I trade. But very dangerous if you're going to trade the futures contracts. You have to put your stops in. Otherwise, if this market starts going the opposite way, you're going to lose money big, way more than what you put in. As opposed to stocks, you can't lose any more than what you put in. Options the same way, you can't lose any more than what you put in. So yeah, that would have been a quick profit right there. But you know what? There's opportunities all over the place, tons of them. You know, this market has opportunities every day, and so you're never going to lose out. All right, so we're back to the ES market. Looks like it's paused here a little bit, and like it showed on the 5-minute chart, looks like it came back and it's going to it's doing a little retracement here, and maybe to this line if the market's going to keep going down, and then it's going to turn around. And that's how markets work. Even within this line here, this 4-hour, you're still going to see some retracements like you did with the 5-minute charts, and then the market starts heading down. And that's how the markets work. They just don't come straight down because there's retracements within that line, like I just showed you. Within the 5-minute, this thing came down here and it retraced. 15-minute, the same thing. Market came here, went down here, and it's retraced. And then if you get a 30-minute chart, the market's gone from here to here, and now it looks like it's going to retrace a little bit, not so much, because this is a 30-minute chart. So the retracement doesn't have to be here. The retracement, this can come all the way down here and then retrace. And then a 4-hour chart, even more. This doesn't have to retrace from here to here, have to go back up. It can come all the way down here and wait for retracement. And now you go into a daily chart, and same thing. This market went, let's say, from here to here, still hasn't retraced yet, and it could wait till it gets down to either here or here and then retrace. So you see how that works? The longer time frame, the longer that you wait for the retracement, the further it can go down before retracement. Shorter time frame, it retraces pretty fast. And that might be its retracement right there, and now it might be headed down, you know. So that's how the markets work. That's how they've been working. I've been trading for 24 years. Nothing has changed. It's exactly the same. That's why I don't watch the news. That's why I don't have indicators, because this tells me everything. I don't need to look at anything else but the charts. That's it. And I've been scanning YouTube and looking at all these young traders out there. Nobody's trading like this. Everybody's trading with the news, the indicators, candlesticks, all that stuff. And yeah, I started off that way. But if you get some seasoned traders, I'm talking about traders that have been trading for at least minimum 20 years, but 30, 40, even 50 years, they don't use all that stuff. You know, they might use a couple indicators, but it's very basic. And as you notice, I only have colors in here. I just have one color because I don't want any distractions, because it's going to distract me from what's actually really happening. Again, this chart is telling me everything that I need to know. Okay, so that's it for today. Let's see where this market winds up. Again, this market, I would assume, will continue down at least to this line here, this invisible line here, and because this is the next support, and then we got one down here. And if it does break this support, or if it comes down, then I'm going to decide to get out and wait for it to retrace and then buy back in. Or if it breaks right through that and comes down here, then that would be ideal. The only reason why I say it's ideal, because now it's really stretching this market out before a retracement, and then this thing's going to shoot straight up and then turn around and come back down. So that'd be ideal, and then you can make a lot of money in all different time frames, including day trading. Okay, that's it for now. I'll talk to you guys tomorrow.